Welcome to the second trading day of this week right here in Lagos, Nigeria. It's a holiday shortened week, but we see trades starting off yesterday, right in the FX market and in the equities market. But let's get to the top stories that set your agenda. Starting with oil prices, we see Brent is up early in early Thursday trade. Due to Israeli tanks there advancing into Gaza, so we're seeing geopolitics play a huge role, moving prices in this market. $85.23 a barrel, 0.36%. But on the flip side, we see the U.S. grade WTI crude, that's down marginally, 0.04%, but still above that $80 psychological level. Meanwhile, data from the National Bureau of Statistics shows that average price of premium motor spirits, also known as petrol, shot up by 223% year-on-year to 770 naira per litre in May 2024 from 238 naira per litre. How I missed that price, 238 naira. That was in the corresponding year of 2023. But on a month-to-month basis, we see an increase of about 9.75%. That's for PMS price movement. That's from April into May at 701 naira right there. So we see it's 9.75% month-to-month change, but a big 223% rise year on year. All right, to the FX market now. See the Naira closed on a flat note with a marginal loss about 0.02% at the official foreign exchange market, 0.02% from the previous close, 1,482 Naira. That was on Friday last week. Then for NAFEX, 1,482 Naira. So we also see a negative close there, 0.15%. So we're seeing flat. A two-day holiday declared by the federal government. All right, to other matters now. Ogun State-based steelmaker, an Indian steelmaker, Aarti, has announced its plan to leave Nigeria's manufacturing sector, joining a long list of companies which have exited the country already in the first half of 2024. According to some media reports, the company, which is located in Aarti, that's the northern part of the state, has already been put up for sale, and big players have submitted unconfirmed bids ranging between $50 million and $100 million. We'll drill down on that later on the show. And we see members of the Nigeria's Employers Consultative Association are meeting with journalists to share their invitation to the third summit, which is slated for later this month. The Director General of the association, Adewale Smart Oyerinde, believes that the summit is a meeting place for the private sector to serve as a platform for alternative policy recommendation for the government. The plan for 2024 meeting is to focus on possible solutions to the harsh spillover of economic reforms ongoing in the country. According to the Director General of NECA, it presents a convenient platform for the public and private sectors to have a common ground. Take a listen.
The summit is not basically to interrogate those reforms, but basically to deepen or share the nexus between the reforms and the private sector, and how government can actually leverage on the agility, using the words of the team itself, the agility of the private sector to help it to navigate through these reforms and achieve the desired outcome that we plan to achieve. For many of us, we didn't experience the good old days, but we believe strongly that the years ahead can be very fruitful, can be very prosperous for Nigeria, and that we can achieve by actually creating this kind of platform where we can interrogate, we can share perspective, and also guide those in government through the pains of organized businesses and the way that the government can leverage on the flexibility, the dynamism that existed in the private sector for us to achieve not only rapid GDP growth, but a total renaissance, as the word connotes, of our socio-economic life in Nigeria.
All right, let's head to the commodities market update now. Join us for this is Mr. Bismarck Rouhani, the CEO of Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning.
So we have another exit announcement from the Nigerian market. This time is the Ogun State-based steelmaker Aarti. And we've had about 6 so far in the first half of 2024. Tell me, is there any silver lining at all to these exits, or how can Nigerians make lemonade with these exits?
Yeah, I mean, let's face it. What is more important in economics is what the future holds rather than what the past has shown. So typically, what we are saying is that we are beginning to see some investors who have a higher risk appetite coming into Nigeria, while those who are skeptical or indifferent or have other options and now begin to review what they have to do next. Some are exiting, some are downgrading their presence, while some are actually coming in. Those that have tolerance and have the capacity to manage in difficult situations, what we call how to thrive in chaos, those ones are coming in. But after chaos and after difficulty comes the light at the end of the tunnel. I think that cautiously we are optimistic that things are going to start improving slowly. And that's why I come up with the whole idea that the inflation numbers came out on Saturday and pointed to a particular type of picture. The picture is that the rate of increase in price levels has actually begun to slow down. And therefore, we are projecting, tongue-in-cheek, that inflation begins to decline from the month of July. The EIU was more aggressive and says that inflation will begin to decline or begin to flatline from the month of June. We think that, give or take how the minimum wage is handled, we think that we begin to see a moderation in rate of inflation in the month of July into August. Not drastically, what we call disinflation will begin to kick in at that time. So there's some light, a little flicker of light at the end of a long, dark tunnel. Don't forget, it has been 17 consecutive months of price inflation. What is going to make this happen is that the central bank, of course, has begun to get a hold of money supply growth. If that happens, even though last month it increased, if that happens aggressively, right? If that happens and we begin to see the management of our oil revenues much more efficiently, then we will begin to see some improvements. But generally speaking, the dark days are probably coming to an end, and a few bright lights begin to come up as we go towards the end of 2024 into 2025.
All right, definitely we have some multinationals that still want to operate, in the Nigerian market. What tip would you give that kind of company, at this time to navigate, this Nigerian market? And, for some multinationals that are looking into this market and seeing some kind of opportunity, what tip will you give them and say, this is how you navigate the Nigerian market at this time?
The saying is that it's during war that generals are made. And it is during bad weather that the good pilots. So economies are by nature cyclical. There are times when they decline and slow down and go into a recession, and then the times of recovery. But the recovery that is coming is going to be coinciding one major development, which is the engagement of Nigeria in the African Continental Free Trade Agreement. Nigeria is the largest market in Africa, and therefore, when it comes to scale, economies of scale, Nigeria and South Africa and Egypt are likely to benefit more than any other countries in Africa. So if you take that and say that if I produce in Nigeria, and Africa is a market, not just Nigeria, Africa is a market, and I can bring down my cost of production, my EBITDA will begin to increase, then I can take advantage of the economies of scale, the increased infrastructure, which allows for roads and aviation and marine infrastructure, which allows you to ship your goods across Africa. You will see that big advantage. And intra-African trade has gone from as low as 12%. It's now at about 18%, going towards 30%. And don't forget, this is almost a $2 trillion economy, right? And so if you can imagine every percentage point gain you make on the African economy means a significant increase in your total market share, global market share. So it is not by coincidence that the likes of Dangote, Refinery, Dangote Cement, and many others are now beginning to take advantage and keeping their sight squarely on the African market rather than the Nigerian market. So it's a regional play rather than a domestic play.
Right, I guess there's still opportunity right here in the midst of the chaos. But you did mention a 17th consecutive monthly inflation increase and the possibility that we might see a decrease for July. But we've seen the UK. The UK, they've reached their inflation target of 2%. In the US, they're also nearing their inflation target at this time. But we see the central bankers are still not ready to cut rates. Just yet. They're telling the markets to hold on when it comes to rate cuts. But how would this, what we're seeing happening in the UK, how would that, impact the Nigerian economy, at this time, even though we saw our exports to the UK actually dropped?
No, the beauty is that the UK is probably our second destination of all our diaspora. That is Nigerians who are working outside of Nigeria, after the US, and I think the UK before you have other markets. So if the UK inflation is coming down and therefore UK interest rates are going to come down, it means that the Nigerians who are living in the UK will have lower mortgage rates. It means that the economy is going to start growing again. They will have jobs. And if that happens, then the remittances to Nigeria will increase. And if the remittances from diaspora to Nigeria increases, then the Naira gets stronger. And there'll be more. There'll be more of our Nigerian citizens who are participating in our bonds, financial instruments, which are going to be floated by the federal government. You will hear that soon in the, in the supplementary budget. The Minister of Finance has alluded to the fact that we need to issue financial instruments targeted at Nigerians who are working abroad. Therefore, the fact that the rate of inflation in the UK has gone down to 2%, which is a target of the Bank of England, I think that July 4 is an election which is only about 2 weeks or 3 weeks from now. Then more likely than not, we would have a Labour government which is more friendly towards immigrants and foreigners who are working there. So when you put all of these things together, I think that there's a sign of this. It even makes it more imperative and imminent that a global recovery will have an effect on the Nigerian economy. And the Nigerian economy, provided that we manage it efficiently and transparently, will benefit significantly from these global trends.
And we know the global central bankers from the US and the UK, we know they did lead with the rate hikes. When inflation was stubbornly high, getting to about to double digits in the UK and also in the US. But we've seen their inflation rate get back to the target levels at this time. We've also been raising rates in Nigeria. What can we learn from these economies at this time?
Yes, Ladi, that's a very, very important question, right? The truth is that there's a lag between when you make policies and when they have the impact. And the impact is not instant. It's not a light switch. The impact is over time. So what are we seeing? The trend is that since we aggressively increase interest rates, we have begun to see is a reduction in the rate of increase in prices. And inflation expectations are now clear that inflation is likely to start declining. So there'll be some disinflation. Like what has happened in Ghana, happened in Angola, we've seen that situation. There's nothing unique about the Nigerian situation. It only means that it's taking longer because we didn't do the sequencing of our reforms was was not well articulated. But now that we are putting all three parts of it together, that is, we are dealing with reverse taxes, which are subsidies, we are dealing with money supply growth, we are seeing diesel coming down thanks to the Dangote refinery, and we are likely to be seeing some other factors that lead to logistics. Then we should slowly begin to see some benefit. But what is important is that government spending on expenses, the waste in government has to be curtailed by fiscal means and using digital technology. But important is that the central bank has to now begin to mop up liquidity the way they have been mopping up, rather than just increasing interest rates for the sake of the interest rate. Therefore, interest rates work as a tool, as a therapy for high inflation, but it is not a single dose. It is a combination, a cocktail of policies, including interest rates, strengthening the currency, fiscal stability and transparency. All of this put together will give you the result, but the result is not going to happen overnight. It's not a magic wand. It's going to take time. So that's why we say, as we approach the end of this year, and starting from July, we begin to see some moderation in inflation. We begin to see interest rates begin to come down. We begin to see some growth, and we begin to see some people coming to invest in Nigeria again. So the picture, while it looks bleak today, if you take a snapshot today, but with the crystal ball we see, we are seeing some slight improvement as we go along, provided and this is that we manage our waste and also deal with corruption within the system.
And with your projection for a possible decline in inflation for July, that means the second half of 2024 might take it a little easy on the pockets of Nigerians.
Definitely. Nigerians are going to be better off at the end of the year than they were at the beginning of this year. Definitely.
After all the heavy lifting. Thank you so much. Always great having your perspective, Mr. Bismarck Arani, CEO of Financial Derivatives Company. Thank you so much.
Thank you for having me. Thank you.
All right, to the markets now. We see demand for Fidelity Bank shares. That surge on the NGX ahead of its upcoming public offer and rights issue launch. That's coming up today. Over 1 billion shares were traded, reflecting strong investor interest in the Tier 2 lender. The bank's combined offer includes a rights issue of 3.2 billion ordinary shares, priced at 9 naira 25 kobo per share, offered at a ratio of 1 new share for every 10 held as of January the 5th, 2024. And we can see the markets yesterday. Let's see the close for yesterday's trade. That was the first trading day of this week in the holiday shortened week. We'll see a mild drop there for the NGX all share index. Marginal loss there about 0.08%, but we'll see about 48 billion naira. That was wiped out from the market cap in yesterday's trade. Let's look at the trading activity there. We see it was all green. A lot of buy interest, volume 1.38 billion shares. That was what was traded. And for the value, worth 16.48 billion naira. That's what was traded yesterday with deals 9,900. So we see there was a lot of investor appetite in the market yesterday. Let's look at the sectoral performance. We see the banking and oil and gas. That was shining yesterday. Banking 0.51%, about 0.5% up. Yesterday, consumer goods, that was marginally down 0.09%. Now we see flat movement for industrial goods. For the insurance counter, that's also in financial services, that was down 0.14%. Normally, when we see the banking counter up, we normally see the insurance counter up, but it's a different play. That's from yesterday. Let's look at the top trades now for the market. Yep, that's it. Fidelity Bank, 1.01 billion units. That was traded there. Big move there by investors, and we see ICO 60.67 million. But talking about investment at this time with economic headwinds, multinational exits, can retail still make money in Nigeria's capital market? Join us for this conversation now is Mr. Ayodeji Ebo, is the MD Optimus by AfriInvest. Great to have you on the show.
Yeah, good morning, and thanks for having me.
Yeah, so I guess the $1 million question right now, how can retail still make money in this challenging economy? Because even with the headwinds, the macroeconomic headwinds, we saw the equities market did reach the highest levels ever in this economy. So talk to me about how retail can actually make money in this economy.
Okay, thank you. I think the first thing that we need to understand is that stock markets or stock investing is for long term. If you are trying to game the market, yes, you may win sometimes, but you can also easily lose if you are trying to just game the market, which means you are trying to be speculative, which is short term. Those should be left for professionals, those that sits with the system on a daily basis. But for investing in the stock market, it should be long term. So once you have the understanding of that, one, it helps you to minimize your risk and also minimize your losses.
Mr. Ebo, I'm so sorry to interrupt you, Mr. Ebo, but you just hold that thought. We'll continue right after this. We're joining a live coverage right now, official flag off for the construction of the Gusau international airports. That we're joining that live event right now in Zamfara State. But this goes on other platforms. All right, Mr. Ebo, you can finish your thought now.
Okay, thank you. Yeah, so it's important to understand that. Secondly, there's still a lot of opportunities. So depending on the strategies that we are using, the first one that you need to note is if you know you don't have much time to check or to trace, to follow prices, you can invest in equity mutual funds. Mutual funds are managed by professional portfolio managers, and they track these stocks for you. So you're able to buy in units, and when they pay dividend, they go after the dividend. Secondly, going long term, identifying stocks that have strong fundamentals. So you would see, and some of the stocks I will mention, these are not recommendations, these are just for examples. For instance, you look like stock like MTN, stocks that had FX impact last year. But when you see that in terms of business-wise, their business strategy is still intact. What led to the major loss in some of those other companies were because of the FX policy that impacted on their profits, on their profitability. So you know that if you invest in this stock for the long term, when they are able to walk back from that loss position to profit, then that stock will rebound significantly. So if you have this other, if you were comfortable to buy that stock, let's say when it was 300 naira, for instance, and now that it's at 214 naira, you should be able to buy more. These are the strategies that people adopt for the long term that gives them significant return. You will see banking stock now. You need to also understand the dynamics of banking stocks. Rights issues are coming out, public offers are coming out. Do you understand the impact? Should you be buying now or should you be buying later? These are some of the decisions that you will need to make given the dynamics of the market. So, but by and large, there are still a lot of opportunities. So if you want to even be very conservative, look at the stock from a dividend yield perspective. So if dividend yield is looking at it, the dividend that is paid per share relative to the share price you are buying the stock or you purchase the stock. So if I'm buying the stock at 20 naira and the dividend I will get is 2 naira, that's like 10% dividend yield. So when you know that that is consistent over time, even if the price comes down from 20 naira to 15 naira, that you are still guaranteed that based on your purchase price relative to the dividend and has been growing consistently, you will be getting cash flow on an annual basis. That also helps you as an investor. So we believe that there are still opportunities in the Nigerian stock market, and that is depending on how you want to strategize yourself to take advantage of opportunity.
Okay, talking about opportunities in the capital market, we know most times you see high risk opportunities. They bring high reward. Most of the time, but looking at the state of things at this time, your disposable income is almost disposed. At this time, is the strategy to avoid all high risk investments at this time, or do you still put some of your portfolio towards high risk investments?
Hey, thanks. I like the word you used, which is because when we talk about portfolio, is having different asset classes. You are investing in fixed income, which has less risk. You are investing in stocks that is considered high risk, and other alternative assets that may be considered high risk. So, depending on your risk appetite, it is good that you have a certain portion in also stocks, which you said the higher the risk, the higher the return. So that doesn't mean that you shouldn't invest in high risk investment, but you can minimize your exposure. That's the amount that you invest in the stock market. But you made a valid point that given the high inflation, consumer wallet being constrained, how is it still very convenient to invest? And we used to say this about savings and investments. Yes, it's really a tough time, but it's also about discipline. And there's no minimum amount that that you can't start with, because when you have most of the myths is that you must have enough money before you start investing. You can start from most platforms now to invest in the Nigerian stock market with as low as 1,000 naira, even as 100 naira. You can start investing. So you would see that if you are consistent, if you are investing 1,000 naira based on your capacity on a monthly basis, at the end of the year, that is 12,000 naira. You would, if you are consistent with that, you would increase it over time when things improve. And before we look back in the next 10 years, in the next 15 years, you would have grown your investment. It is about the consistency, not even about the amount that you put in when you want to compound or when you want to grow wealth.
All right, so what are you expecting for market close today? We got the first trading day for the week. That was yesterday, and with a marginal drop there. What are you expecting for the close today into tomorrow?
Okay, I think that the market will still remain a bit volatile, given the high interest rate in the fixed income market. Yes, some of the banking stocks trying to stabilize, given the expected right issues and offers that is ongoing. But we believe that after even those rights issues, those offers, which means that there will be increase in the number of outstanding shares, there would be a bit of correction on the stocks of on the prices of some of those stocks. But that doesn't mean that it now presents more opportunities to even buy more, even if you have participated in the rights issue and the offer. So we believe that it will still be very volatile. It may close a bit positive, given what is happening within the banking sector space, and it may close a bit slightly positive today. But when you look at the overall market, it's also good to look at the performance based on sectors, because there are some, when you look at the top 5, top 6 stocks, their performance has a way to also concentrate concentrate or skew towards the overall index. So whatever is happening to those top 5 stocks may impact the overall index, which necessarily may not be the total performance of other markets or other stocks in the basket.
All right, definitely. We'll keep tracking and see how the markets close. And you heard it from Mr. Abel, who's saying there's still opportunity, in Nigeria's capital market. We'll keep tracking to see how that goes. Thank you so much, Mr. Ayodeji Abel, MD Optimus by AfriInvest. It was great having your perspective.
My pleasure. Thanks for having me.
All right, that's it from me on Business Morning. We'll give you a summary of the stock market close at the end of day today and the FX market close at the same time. I'm Ladi Williams. Thank you so much for watching. It's back to the Sunrise Daily team.